Hey, it's Andrew here. Thanks for tuning in. In today's video, I want to talk about a question that's in a lot of people's mind, and that is where the market is heading and what is it currently doing. Well, we had an interest rate announcement yesterday that saw no change, and that is twice in a row now with no rate hike, which is obviously making a lot of people happy. And we base our opinions on facts and statistics. We don't base our opinions off of what the neighbor down the road is saying, not what the media is saying, but off of straight up statistics, because those are things that you can actually track. So we're going to go through and look at things from a month to month basis over the course of time to kind of see where things were and where things are headed. And hopefully we get a good direction of the way things are looking. So follow with me, and I'm going to share my screen so you can see what I'm doing. We are getting all of our stats from the Toronto Real Estate Board, and we aren't looking at one city in particular. We will be looking at all of the real estate market, all the sectors and all the cities. This is the stats from everything on the Toronto Real Estate Board. Okay, so month to month comparison, and we'll track things along. Let me explain. So 2022 is the black, 2023 is the blue. And first, we're going to look at average prices. So everyone knows, coming off of 2021, extraordinary year in real estate, high sales, high average prices, and continuing to 2022 is no difference, as you can see in January. And then February, sky high, record prices in February 2022. And then we had a downward trend starting in February that lasted for several months. Getting into July, the market really just evened out for the remainder of the year, kind of just held steady up until now. We're in January 2023. January 2023, we feel, is the bottom of the market. And, it's not just an opinion, it's a fact. It is the lowest average price that we had seen in that course of time at $1,037,000. And then since the beginning of the year, average prices started to climb up very slightly, but still going up nonetheless. Heading into now March, which was last month, we see the highest average price since June of last year. Okay. So that's the average price comparison. Now, that's very important to know, but there's other important factors that show us a trend in the market. Okay. So average price is going up. We can see that. Another one that's very important is absorption rate. So an example with absorption rate, what this means is it's essentially how many properties are selling on a month-to-month basis. And so, for example, if you have a 60% absorption rate, that would mean that if 10 properties were put on the market, 60% absorption rate, 6 places would sell. So that's what that means. So starting in January of 2022, we can see we have super high absorption rate sitting at about 140%. Places are not lasting on the market for long. They're gone within hours, within days, not enough time for buyers to even go see a property. That's how quickly things were selling. February, still very high, but then we start to see a huge drop in sales over the next 6 months, all the way to July, where we see our lowest absorption rate in quite a while. And then again, for the remainder of the year, just kind of hold steady for the remainder of the year up until January, where it's still very similar, just slightly above that red line of the low. But then February, the absorption rate starts to go up. And then now we're in March of last month of March, we see the highest absorption rate since March of last year. So absorption rate is going up, which means that places are starting to sell faster. Okay. Now, another key factor to see in trending is months of inventory. So months of inventory, just a brief explanation. If you have 1 month of inventory, that means that if no properties were to go up for sale, it would take 1 month for the current inventory to sell out. So obviously, with no surprise, January 2022, we had extremely low inventory sitting at about 0.7 months of inventory. So extremely low inventory. And that continued until March. And then because we see buyers putting the brakes on or stop purchasing, inventory is starting to pile up. So inventory piles up until we reach a really high number of inventory, around 3.1. That's the lowest months of inventory the highest months of inventory that we see, which is in July. And then for the remainder of the year, it drops down a little bit, months of inventory, but then essentially it's pretty even for the remainder of the year. So same story overall in all trends. And then we get to January of 2023, still sitting pretty high, but February and March, we see significant drops in months of inventory. And if you look at March, we're looking at the lowest months of inventory since March of last year. So what does this all tell us? Well, this is all kind of pointing in the same direction, in one direction. We're seeing that average prices are slowly creeping up. We are seeing that the months of inventory are going down, and we are seeing that absorption rate is going up. So months of inventory are down. Well, that means that there's not as much inventory for buyers to choose from, slim pickings. And then absorption rate is going up. So that means that homes or properties are selling quicker. So those two factors combined, you can see now why the average price is heading in the upward trend. And if months of inventory continues to drop, absorption rate will continue to go up. And yes, average prices will continue to go up as well. So be interesting to see what happens from here on out. I know we're interested. Hopefully you're interested. If you have any questions about this video or anything else, we're happy to help. Reach out at any time. Take care.